Hi guys and welcome to the trading show. This week we are gonna talk about
markets, US indexes slide, our portfolio, DAX surges, tip of the week, trend following on Google, and the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Negative week on the markets in a more or less generalized way. Mainly the American indices were affected, with the Nasdaq in the lead losing more than 3%, while the mini S&P currently loses 1.75%. The only positive index is the European DAX. As you can see from the chart, the indices are attempting a bullish reaction and have recovered much of the current week's downside. The bond sector is also negative, with the T-bond suffering a fairly large loss this week. The energy sector is mixed, but we don't see particularly large positive or negative returns. Metals are almost negative, the meat sector is completely negative, soft commodities show mixed returns, and also cereals, which had risen quite a bit in recent months, are declining. However, the bean oil future continues to be on historical highs, as well as soybeans, which is close to the recent highs. The currency sector is mixed, in particular the trend of Bitcoin stands out, losing more than 12% in the current week. The chart is not promising. You see, it seems to have exhausted the bullish push. On the volatility front, of course, we note historical volatility increasing in the short term over a period of 1 month, obviously due to the decline in equity indices during the week. We can see it from the mini S&P chart. Volatility is up compared to the values of the last month. But if we look at the term structure of the volatility, except for a small spike happened around Wednesday, the situation seems returning to normal. The VIX, as you can see, has risen, but has not managed to overcome the recent highs, so all in all, the situation will seem to be improving. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi guys, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to show you two opposite, let me say, strategies. The first one was developed on the DAX futures, and it is a trend following strategy, while the second one will be a reversal strategy on the mini S&P 500 future. We can see that this strategy on the DAX, the trend following one, was developed in 2016, and it enters long when from the open a determined percentage is reached, and will do the opposite for the short side. So if the market starts to collapse in a certain sense, to go down from the open of this session, the strategy will enter short. And we can see that during the last period, the strategy managed to reach very good trades, both long and shorts. And in particular, yesterday and also 3 days ago, the strategy took nice trades for an amount of 5,000 euros. We can see from the equity curve analysis that the strategy after a period of drawdown, we can see it here at the very beginning of the backtest, the strategy recovered really well and now reached new equity peaks. As said, this one was developed in 2016 and is still producing very good results. Now we can move to the next strategy that, as said, is opposite to the previous one, the trend following one. And in particular, this trading system enters short, for example, when the market is going up, and vice versa, will enter long when the market is going down. This strategy is so a mean reverting strategy, a reversal strategy, and we can see that during these uptrend phases, like this one, the strategy will take short position, like for example here with a stop loss, and then the next day another short for a profit target. And simultaneously, when the market is going down in a certain sense, the strategy will look for long entries. In this case, we can see that this strategy has a very tiny stop loss of $500. There are just 10 points on the mini SP 500 future, and the take profit is $2,500, of course. So 50 points. Looking at the equity curve, we can see that the strategy was leaving a very bad moment. We can see that the drawdown occurred was of $6,000, which is not a very big amount for this kind of future. But with these two last trades, the strategy recovered really well. If you think that with two take profits, the strategy took a profit of $5,000 and the drawdown was of $6,000. So we can say that with these two trades, the strategy managed to recover from the losses that occurred in the previous months. Also, looking at the annual period analysis, we can see that the strategy is performing quite well, also in 2020. We can see that, of course, the percent profitable of the strategy is very low. We can see it here, it's just a little bit over 21%. And of course, this is due to the small stop loss that in some cases may be an handicap, we can say, because of course we just cut the losses after a 10 points movement, but many times this tiny stop loss helped us in containing the drawdowns, as we have seen in the equity close to close chart. Also, 2021 performed quite well. This strategy is an intraday strategy, so we don't expect any big movements, but we are happy with these kind of performances, as these results already include commission cost and slippage.
Hi everyone, and welcome from Andrea Unger. Today we will have a look to the stock Google. So Google is a very famous American stock, and it's one of the most capitalized stocks within the American stocks market. And if you have ever tried to search for Google stocks, you may have asked yourself why there are two tickers for this corporation, that is Alphabet. And in fact, here you can see we have the first ticker that is called Google and the second one that is called GOG. So I have investigated a little bit about this phenomenon, and I discovered that initially there was only one ticker that is Google, and this ticker then has been splitted in two, and one half of those shares has been split into a new share, and the name of the second share is called only GOG. So you may ask why they have splitted the shares, and the reason is that the first share, so the first ticker, so Google, is a Class A share that gives the power to the shareholder also to vote, while the second one is a Class C share that has the same a person who buys the second the second ticker has the same amount of money invested in Google, but it has no right to vote. There is then also a third class of share that is called Class B, and the Class B is a type of share that gives to everyone the power of 10 votes if compared to the power which would have with Class A stocks. But Class B shares has been given only to the co-founders and insiders and a little bit of the management people. And in fact, this action has been done by the two co-founders, Larry Page and Sergey Brin, to preserve the complete management on the corporation. And in fact, from my researches, I discovered that Larry Page still have the 26.1% of total voting power, while the other co-founder, Sergey Brin, has still the 25.2% of the total voting power. So both of them in conjunction, they have more than 50% of the total voting power, and then they can make any decision about the corporation. In general, I've noticed that both of the shares moves quite the same way. There isn't any particular discrepancies between the two shares and the buy and hold of the two shares. And this operation has been done in April 2014. Then I have tried to code something on Google, and the final strategy I have created buys on the highest high of the latest two sessions and sells the shares on the lowest low of the two latest section. And there isn't any particular trade duration, so the trades are opened at the breakout only long of the highest high of the latest two sessions, and there is on the opposite band, if we want to say so, the trailing stop. So the exit occurs when the lowest low of the two sessions is touched. Okay, so let's have a look to the report. The equity curve shape is quite nice for being a very raw strategy, and the average trade is not exceptional at this moment. In fact, is 0.9%. I remember I'm doing the tests with $100,000 per trade invested, so it's a fixed cash amount per trade. And if we have a look also to the annual period analysis, we can see the 2008 had been a very bad year, like in general all the American stock indexes, and also due to the recession there had been a very bad period overall. But also 2019 hadn't been a bad year, a good year. And if we have a look to the second equity curve, so for the other strategy, we can see just from the periodic analysis the trend is pretty the same. And if we have a look to the equity curve, is also this is extremely similar. But we have to remember that this share, so this ticker, didn't exist prior to April 2014. So the first part, I suppose my data feed had merged the data with the previously the prior ticker, so from Google. So this data, I think, is in common with the other ticker, while the second part, so what follows this line, is exclusive to GOG, but in general is extremely close to the other tickers results. And also in this case we have a very similar average trade, and I repeat, is not exceptional. I would prefer to trade the stocks with at least 2% of the invested capital as average trade, 1.5 or 2%. Here we have 0.9 or 1%, so I would prefer to trade this strategy once I will have increased or improved a little bit the strategy. So as usual, guys, I remember you, it's just a raw idea, and I think there is a bit of potential to work on this kind of strategy on this market, but I wouldn't recommend you to trade this strategy as it is right now, because in my opinion it's not able at the moment to face the impact of the slippage and the commissions.
Rollover calendar for the next week will have the expiration of crude oil future on May 20th, followed by all the other energy futures towards the end of the month. Next week we also have the VIX future settlement date on May 19th. I hope you enjoyed this video, and if you want to learn more about the trading method we at Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the 4-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships, and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger Method now. You pay only shipping and handling.